Hey everyone, Chris here for the Business Report Show. Before I begin today's video, make sure to hit the subscribe button, and if you do end up enjoying the video, make sure you hit the like button. Every little bit helps. Second thing is, everything I say in this video is just my personal opinion. There's no guarantee of success. Make sure you seek a professional before investing. So today was the inauguration of President Biden, and he was going through a flurry of signing of executive orders this afternoon, and one of them was the cancellation or the revoking of the permit for the Keystone XL Pipeline. So for those of you who don't know about the energy industry, Keystone XL is a big project that was to connect the pipeline system in Canada into the US between the province of Alberta and the state of Nebraska. The US is Canada's largest customer of oil. 2019 alone, we exported over $68 billion worth of crude oil down to the US. And the biggest driver of this, of course, is the United States has a lot of refineries that are capable of refining some of the heavy crude that comes out of Alberta oil sands. Now, the importance of the Keystone XL Pipeline was to connect the final portion from the Canadian border through into Nebraska. And TC Energy was already in the middle of building this. Former President Trump had approved the building of this pipeline. And of course, as I said before, today, President Biden has officially revoked that permit, meaning TC Energy is no longer allowed to build that pipeline. And in fact, they sent out a press release today that they are immediately halting all construction on the pipeline. Now, what's interesting about the Keystone XL is that it has been 10 years in the making for this section of the pipeline, and there's actually considerable amount of support from indigenous groups. In fact, one group was contemplating investing over $1 billion into the project. And in Canada alone, the Alberta provincial government also stepped in and provided TC Energy with $1 billion in capital, and also set aside an additional $6 billion to back the financing for the completion of this pipeline. So, of course, the government of Alberta is not so happy about today's cancellation, and in fact, the Premier of the province of Alberta went on news to express his disappointment with the decision without a lot of consultation between President Biden and the Canadian government. So, of course, there's so much politics behind this decision, and we know for a fact that in the first few days, President Biden's going to sign a lot of executive orders to undo some of President Trump's mandates. And we saw this with former President Trump passing a lot of executive orders to cancel a lot of former President Obama's mandates as well. So this is the politics of this. But at the end of the day, what Keystone XL Pipeline meant for the Canadian energy industry, approximate 800,000 barrels per day being shipped into the US. Now, currently, Canada already ships about 3 million barrels a day into the US refineries. One of the reasons why the US refineries really like to import Canadian oil is because Canadian oil does sell at a significant discount from WTI prices. And so if, for example, WTI was at $50 per barrel, you'd see Canadian oil spot prices around 38, maybe sometimes even lower, $35 per barrel. So there's a steep discount in buying the oil. And the key arbitrage opportunity for the US refiners is to refine the product and be able to sell at not only the WTI prices, in some circumstances using the Brent oil price, which is even higher than WTI, as a benchmark for some of the products. So as you can see, it's very lucrative for the US refineries to be using Canadian oil. So the big question for investors is it time to sell all the Canadian energy stocks? And my personal opinion is that Canadian energy stocks are actually quite undervalued right now, considering some of the pre-COVID level prices and some of the pre-COVID recoveries that were happening with the Canadian energy companies. And so if we take a look at the pricing for TC Energy Corp as an example, right now, despite the project being canceled, stock price really only fell about 0.5 percentage point today. I think what it is that a lot of investors, after it was officially announced that President-elect Biden would be certified through the Congress and Senate for his election win, the share price had already been built in that this project was going to be canceled. Now, is there going to be continued selling for TC Energy in the coming days? Potentially. Investors may still be very bearish on the stock. But when taking a look at the current dividend yield, about 5.5%, and it's still trading about $10, $13 under its 52-week high, TC Energy still seems like a good play. And not only that, Keystone XL was going to be an extension, an addition for a lot of these Canadian energy companies. So many of them, the current prices had already built in not only the COVID drop, but they were already being discounted with the continued pressure between the WTI prices and the Canadian oil prices, which is why some investors are still seeing these stocks as quite undervalued, as they're still cash flowing and many of their large intensive capital projects have already been paid for and they're just churning cash right now. And so when you take a look at companies like Suncor, Canadian Natural, and you take a look at TC Energy and Enbridge, the share prices are relatively flat right now. In my opinion, I don't think there's going to be significant price jumps for a lot of these oil companies, nor do I think there's going to be a significant drop either, unless WTI prices do fall for 2021. But currently, they've been trading consistently above the $50 per barrel mark, and it seems like that may be consistently trading around that area for the remainder of 2021, which means for a lot of these energy companies, they are generating positive cash flow. The reality is the International Energy Agency has forecasted the consumption of oil to drop a little bit for 2021, but you're still talking 96.9 million barrels of oil per day. So in the short to medium term, the world still relies heavily on oil. Now, of course, oil is used mainly in transportation. About 68% of oil is refined into gasoline in the US to use to fuel combustion engine cars. So where we see some weakness and potential decrease in demand for oil when you look long term is when the EV market starts picking up and the transportation sector percentage starts going down. But that's still a long ways to go. If you take a look at the current EV market, it's still a very small percentage of the entire automotive sales per year. So for energy companies, there's still a long runway right now. And while some investors may see energy stocks as a bit undervalued, I see it as properly priced right now. And with the dividend rates for some of these stocks, as I mentioned, Suncor, Canadian Natural, and even TC Energy, and if you even look at Enbridge pipelines, to me, I think they're fairly valued right now for what you're potentially going to get for a little bit of equity, but a pretty consistent dividend payment. The other thing to consider for Canadian energy stocks is that the Trans Mountain pipeline expansion going over to the West Coast to transport the oil to other markets outside of the US is going as planned, and that should be up and running soon as well, which will allow some more capacity to get some of the Canadian energy out of the country. The other thing I want to mention is that there's a focus on natural gas right now, as a lot of companies are starting to look at hydrogen fuel cells as an alternative energy source to power some of things like large locomotives, large semis, in areas where electric vehicles and batteries are not quite practical. Now, there's many ways to create hydrogen for the electrolysis process to generate electricity, but the most cost-efficient way right now, and using a process to turn the natural gas into viable hydrogen to power these. So there is still significant uptake on that side of the energy industry. So for companies, especially in Canada, that have a specific focus on natural gas, it is still a good time to be in that space. That's it for today's video, guys. Thank you for watching, and don't forget to hit the subscribe button. Don't forget to hit the like. As I said, every little bit helps, and make sure to leave your comments below. I'd like to hear from you about what your thoughts are on the energy industry. I know for the long term, we can probably all agree that consumption is gonna go down, but I'd like to hear from you about the short to midterm and where you see this going. So always be learning, always be investing. I'll catch you next time.